Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco.
Hey, Felix.
How you doing, man?
Good. Monday back on the hunt for new great ideas.
Yes.
What do we got today?
You know, I guess we got to talk a little bit about, just right off the bat. Let's talk very briefly about Bitcoin.
Okay.
I did send you an article. I think I pulled it up here. Let me just make sure I have it. I sent you an article that I just wanted to, I want people to start thinking critically and being the skeptic that I am, and look at every article and ask questions. So, every time I see an interesting article, I always, try to connect the dots with things I've read before. And so in the last couple of weeks, we've heard about, obviously Bitcoin's had a humongous run. There's no question about that. So the idea though is that we're starting to hear different things and it's like, again, the chess pieces are starting to move. We heard Peter Thiel talk about perhaps China it's a weapon. Bitcoin was a weapon created by China. Fact, most of the mining in the world is done in that sort of region, right? So, you just look at the facts. Where's the money being made? The miners make a lot of the money. They were making most of the early money. They have all the early coins, right? And so they have all the early coins, and now the thing's 64,000. So let's assume they didn't sell any. Just I'd make a bad assumption, but let's just assume they didn't sell any. And their average cost is maybe $2,000 on Bitcoin, right? After they're mining all the way up. And, since let's call it the last year, more and more people in the Western hemisphere are buying Bitcoin. They're pushing the product. And so you have this situation factually where money is coming in, and a lot of that money, call it the late money, is coming in from the United States. Bitcoin miners basically coming out of China, have all the early Bitcoins. China had at one point said, no, we're putting regulations on it. Maybe they wanted to have all they wanted to control all of it. And now at 60,000 over the weekend, even today, 55,000, you have China in this article. When I read that, all of this came to my head. In huge reversal, China now calls Bitcoin an investment alternative after years of crackdowns. And, you read this, and I think it's interesting. It just talks about a couple of, the sort of the history of China and whatnot. But, after reading this, there's one sentence, I guess, that I was, they're talking it up. And then he added that the central bank will keep its current regulations on cryptocurrencies. So essentially, it's just pumping it up and telling people, yes, crypto is something, that we want to take a look at in terms of assets. So in my mind, I thought, okay, because I always think, how am I getting fooled, right? That's the first thing. Whenever I read, why is this article coming to me right now? Why am I seeing it? Why would they be talking about it right now at 55? Where were they at 20 telling everybody to buy it? Now it's 55. And I guess in the back of my mind, I thought, is this one, the 5D chess where they got all the coins? Maybe it was a weapon, and now they're really trying to do that last pump so they can sort of get out of it and, kind of move it down and maybe buy it lower at a different time. I don't know, but, putting the pieces together, I start getting that hunch, like the spidey senses are there and saying, wait a second, what's really happening here? Why would China come in now to start pumping it up and saying, yeah, it's alternative asset and whatnot? So it's something to think about. Obviously, the stock has had who cares, right? The stock goes from 65 to 54. It's still higher than where it was a couple of weeks ago. So we'll see where it goes. It's trading weak over the last few days. There's talk about there was a allegation that they were about to make an arrest and there was fraudulent behavior. Who knows? There was unnamed sources, so you never know there. And apparently there's a hash problem coming out of China. And so that was the initial move down. So nobody fully knows the full story, but when I see articles like that, what I ask everyone is to think about all the moving parts and the pieces and try to put your own, spin on what you think is going on behind the scenes. Okay,
Yeah.
so I'll just say that. Then the other big news over the weekend was this brutal video that came out on Peloton. I don't know if you saw it, but brutal. Like to watch how this thing developed, and it was story opening up last week, and then they put the video out. When I saw the video, it was pretty scary. And I'm looking at the kid and I'm saying, I'm hoping, I didn't know the outcome, and I'm saying, I'm hoping I'm not watching something that's going to be really bad, because it looked really bad going into it. Thank God that the kid actually got up and walked away. But I mean, this machine looked like it was going to eat him up, and it was pretty scary. Obviously not good for the stock. Stock is trading down. We were, look, I invite people to, do you have it? Do you have that? Why don't you try to pull up the
video?
The video while we're in show. We've been talking about Peloton for the last couple of months, but as one of the stocks, the ARC names, the names that are these fantasy type of names. I have problems with Peloton as a stock. We've talked about Apple as a competitor. We've talked about reproducing. Do they have a large enough moat? Is the moat, can they withstand the problems that come with becoming a bigger company? Can they withstand the drop in the market? Comparing Peloton to Lulu, I think I take Lulu all day, just simply because it's withstood the test of time. And Peloton's right at in the thick of things here. The CEO made an announcement defending it. The stock is still down, but we had a video last week on buyers. I see Rudy. That's awesome. Rudy made some good money on Peloton this morning. But buyers buyers in puts in the name, and they were buying the May 100 puts for 350. So show them where to find that on the YouTube, just so they could see it. Just to go to the YouTube channel and really just make sure this is what we're doing, and this is why it's important to have. We're putting these up as clips so people can basically search right on the clip and say, you can either search the stock, or I think you search the stock or the name, but you don't have to play it. You could just leave it to where it was. You would look it up here and see sort of what we were thinking, but really that search button on the YouTube is your friend to sort of see what we were doing, to go back in time and see exactly which one they're buying. It's part of the research I used to do just in general. So I have a notebook of all the different trades. This helps me. I'll go back and look. When did we look at this? I know we spoke about this. There's something going on here. I want to look at it. So it's a good resource. Peloton last week, guy coming in looking for $90 to $80. I think we were looking at the stock. I mean, if they're buying the May pars, you talk about $90. Again, 85 to 90. That's a huge drop. And now the stock's trading 105, and people can't get enough puts. So let's see just an idea, get an idea of what they're buying today. And see here, it's one of the top stocks. Stock down 10% here, but the May looks like there's some taking some off, but really it's April. They were coming for the weeklies right on the open. They started coming after these. They were the 105s, the 110, the 105s, the pars, the 110s. And the one thing I would say about the Peloton, is that the CPSC, right, the Consumer Protection Agency, they're essentially, there's people there trying to make a decision on a recall. Do they recall it? Obviously, the CEO does not want that. But the CPSC is made up of probably handful of people. I mean, there's got to be a commission there that has to vote on what they want to do, how they want to do it. They're collecting evidence or videos or trying to talk to consumers. They were trying to get data from Peloton, and Peloton blocked them and said, we're not giving you private data. So now the CPSC is out there probably trying to ask the public, can you give us testimonials? Can you tell us what's happening? So we got to make a decision. Because there's humans in there, because there's humans sort of running around making that decision, it's very easy for hedge funds to start poking their hands in there and saying, what's really going on? Calling people that they know in high places. Can you figure out what's going on there? I want to understand. And, I'm sure there's people trying to gauge, get a better handle on the 20 people, 10 people, 2 people, 1 person that's making the decision. What is going to be the decision? If you know what the decision is going to be, and they're going to make a recall, it could spell a lot of problems for Peloton. It seems like it would be a disaster, frankly. And if Peloton does Peloton just sort of say, we'll fix the problem and resend it to you? Or is it a design function where they would have to say it might take months, and maybe they'd have to give a refund? How many people have, I don't know how many there is, but I would think there's got to be some percentage of people that have buyer's remorse on a Peloton $4,000 bike. I got to believe there's some people, some percentage. Maybe it's 1%, maybe it's 30%. But imagine this happens and you get the out and say, I just spent $4,800 and now I actually can get a refund. I used it twice and send it back, get a refund. It could spell a disaster for Peloton. And I guess that's why people are coming in, and the stock is still under pressure, even with the CEO defending it. So we'll see what happens, but it's interesting development in one of these names. And when I think it's important to understand, when you're trading at 150 times earnings or no earnings and just trading times sales, that any problem like this, or any problem really with the company, you can really get hit pretty hard on the stock, because the stock is on a dream. And if that dream is getting any dents in it, then you're going to have some problems there. So that's Peloton today. We're seeing put buyers. They're coming in for the April's and May's, and they'll the target stock prices are looking closer to like the low 90s if it's which is where the May's are going to be a little bit heavier on the downside. So the May's are looking at closer to, you could see here, 80s. So in a bad report, a bad outcome, let's look at the stock and try to figure out quickly why they might think that. The big level here is going to be 95. It looks like is some sort of big level right around this, call it 95 range. You have this, looks like a little bit of a head and shoulders. Okay, this is called a head and shoulders. Okay, where it goes, you see that up, down, makes an up move. And now it would go down. It would break this neckline. And if you got that there, you could see this is, you're talking about a lot of volume right around here. Maybe there's an 80 line somewhere here, but it goes quickly from 80 to sort of 70, 60s. Let's just call it somewhere right around here, right in the middle. So you're literally looking at, if this breaks bad number, 95, 80, 70, maybe, breaking down right here, the 200-day is never good. This 50-day we see has been coming down. The stock is hanging on here, and it needs good news here to push it back through and try to get back up through this 125. Otherwise, what's going to happen is, and we've talked about this on all of these names, if it closes on the lows here today, the shorts are going to get, it's going to embolden the shorts. They're going to get more aggressive tomorrow, and they're going to keep on pushing until someone says, no, this is, the fear now is building up. And so they're going to keep pushing it lower to see whether or not people break and say, you know what, I'm going to pare down, or until there's good news. If there's good news and for whatever reason they don't recall, or they say we're just going to find them, I don't know exactly what the outcome could be, but you're looking for something to come back up. You're looking for buyers to step in. No buyers, the shorts get more aggressive. Okay.
Right. Yeah.
Good.
Nice.
So that's Peloton. Let's talk about our favorite stock of the month. I think it just keeps popping up, and we get a lot of look. I think the people who've watched the podcast for a while understand what we're trying to do. We're trying to show people what we're trying to read the chart and show people what's going on in the options market. And the Deutsche Bank upgrade today on NIO with a $70 or $75. What was it? $70 price target?
70.
Did you see
Yes.
that? $70 price target. In NIO, they were positive on XPUV and LI. All of these names, they have to trade back up today. Meaning they have to trade back up to get the shorts sort of stop their pressing game here, right? This is a bad setup. It's a bad setup psychologically. You can see what's happening here. This is a bad setup where people have taken losses here, maybe even been buying. The stock comes down and it's forming this bearish flag, and it's holding on to the 200-day for dear life. And beyond the 200-day, you have a lot of risk here, right? There's a lot of risk from 34 to 32. There wasn't much traded. essentially you had this move here with good volume and here. So you're talking about this little window of 2.5 weeks of trading between 32 and 32 and 22. So this is a stock that I consider hanging on by a thread, and you should be careful here if you own the stock. And it might be better right here. This might be a situation it's better to buy calls, like buy a call spread or buy calls, to see it go from 36 to 60, where it would break this bear and go straight up to 60, I think would be tough. I think you're going to get some selling, and if it does break, some selling in the 48.50, and it'll come back down a little bit, and then maybe up. It's going to take several months probably to actually turn this around and go back up. If it goes down, you could see a sharp move down, because there's just nothing holding it here. Okay, so that's something to consider. They are buying. What are they buying today in Peloton?
NIO,
I'm sorry, in NIO. They are buying the
April 30th, 40 calls.
So the earnings, right? So it makes sense. It just makes sense that, I want to buy these calls, and I kind of want to maybe get out of my stock. Okay, so that's what that's my thinking is probably a better strategy right now. Let's see how this transpired today. Okay, so we had the call buying here early in the morning till we get the large print here. So we get the large print right around here. It looks like they came out buying it. Okay, so it looks like they came out buying it. Vol's up, started at, let's call it, yesterday it's 89 minus, call it 11, so it's 78. So vol was 78, and the stock trades up. The vol opens up at 85 and trades all the way up to 95. So the stock traded up. They're buying calls, bidding and buying. And the minute they stopped the big prints, you could see that the vol came off and the stock actually came off. Okay. And then probably what this is that everybody's chasing NIO calls here because of this big buyer, right? Or not everybody, but people see this unusual option activity and they start buying right behind it. So a lot of this, or maybe it's the same guy, but I suspect it was such a big play in NIO today. It was pretty exact, and they're buying a dollar option. They're looking for a bounce back. He had a Deutsche Bank earnings. Deutsche Bank upgrade. So this right here shows me that there was a buyer, and after he was done buying the most amount, the stock immediately sold right straight down $2 from 37.5 down to 35.5. So it would make sense to me. That there was a buyer. He is buying NIO calls for earnings, but he's probably selling the stock, right? He's not there bidding. He's not there buying calls and then bidding for the stock. It doesn't appear. So that's my concern with that UOA. Not saying it doesn't work. I'm simply saying that I like it better as a risk reward play, thinking, you know what, I will go and buy these calls and look for a move higher on earnings. Okay. If I'm wrong, and it doesn't go up, okay, so be it. I'll look at earnings. If it's good, then I can get back in the stock. But if I'm wrong here on the stock and the earnings are bad, this thing, like we just showed, can get drilled. Yeah. Right. It can get actually drilled from down to about 30, in the mid 20s. Not saying it is. I'm saying if it goes down, if it breaks to 200, if the earnings are bad, if in that scenario, it can get drilled. If it's up, well, you know what? I can pay $1 for these calls and stick around and have a little bit more hang time, if you will. Okay.
Fair enough. Yeah.
So that's NIO. It's just important. This is a risk reward type of situation here where we're at a big technical level and nobody knows what's going to happen. So how do we manage either being long stock or long calls here? Cool.
Okay. I like that. Let's everybody, if you do us a favor and like the video, subscribe if you haven't. Helps a lot. Now, one I want to talk about is Apple, and we've been on Apple for a couple of times already. You've shown a different kind of trade. We've been looking at calls.
Apple. So we've been talking about Apple since the middle of March. Okay, we've talked about just getting long some of these bigger tech names, and probably somewhere around here, middle of March, I would say. The stock has made a significant move for Apple. You're talking about we were talking about it in 120 for whatever reason. It reminds you, it's like 110, 119, 120.
Yep.
So maybe somewhere around here. Okay, so let's call it somewhere around here. And the stock has now made almost a what's that? 12.5% move, 12% move up to 134.47 here today. So what do you do now? There's a product announcement, I believe tomorrow or the next day, tomorrow.
Yep.
And earnings are next week. So you have a situation where you've had a big move. This is a large move in Apple. 15% on a $2 trillion company is $300 billion. So we're somewhere around that type of market cap that was added. And what do we do? So I'm looking at this. Several people have sent me an email on Apple and said, I'm long. What do I do? Do I take some off? One, it's always okay to take some off. If you bought a little bit longer term and you kind of want to hold it because you like it and you're just thinking about potentially hedging, then you might want to do something like let's take a look at something. Earnings coming next week. So with these types of trades, maybe June, just to see where the Junes are at. So the Junes are 130, 120 is how much? That's a 10-point, 130, 120, 160, and 440. So 280, 720 to make 280. I'm sorry, 280 to make 720 if it goes straight down. So. Let me see how it is in May. Looks like the stock came off a little bit. In May, the 130, look and say out of the money 3%, just in case earnings are bad or they don't like the announcement tomorrow. But the 130, 120, 130, 120, so that's $33.80. So that's $2.20, 220. Okay, so 220. You get the earnings and maybe 150, 220 and 85. So maybe something like that. So you to hedge here, if you're long the stock and you're looking at a potential hedge, you might want to do the 130. You want to buy the 130 puts for call it $3, sell the 120 puts at 80 cents. So that's 220. And then you can collar to the upside at 150, which is another 85 cents. So 220 less 85 cents is $1.35. So you would pay $1.35 and you're basically protecting yourself on the downside. You're protecting yourself for 10 points between 130 and 120. The most you can make is the most it's valued is 10. So you can make $8.65 there. So you could take 865 back if it goes down. If it continues to go up, you get another 16 points of upside for the next 4 weeks in Apple. And you got to think 16. Remember, if you bought it where we're talking about 120 to 150, that's 30 points in Apple. Whenever you can take out 25% in Apple in 6 weeks, 7 weeks, that's a great trade. That doesn't happen often, and especially in a market cap with these guys. So I think that looks really interesting as a trade if you're long the stock or you got some calls and you wound up playing this and you're being long. But that's how I would look at it. I think Apple, trading down at 120 is an area that again will find buyers unless they completely blow it, and then at least you hedge yourself for $8.50.
Right.
Okay.
Yeah, cool.
Is that fair?
Nice.
All right. Good. What else? Oh, now I have something for you. I sent you a link, but I have it up here too now. Someone sent me this, and I thought it was really interesting. We've talked about the name in the past, so I'm going to show you here this name, and we talked about it in a way that I think will start making sense now. The stock is QuantumScape. So QuantumScape is under a lot of pressure here. There was a short research report last week, really clobbering the stock here, talking about fraud. I mean, they actually used the term frauds, I believe. Here, let's just take a look at the title of this thing is. So, Marco, I gave you the link. You should put that on the thing. This is a long read, by the way. This is a small book, 188 pages. It is large print. I think you'll get the gist after page 10, to be honest. For the first 10 pages, you start understanding what's actually happening, what they're saying. And then you can dig into what areas. It's in some places, it's very technical because they're talking about solid state batteries. I kind of avoided a lot of the really technical stuff and try to get the gist. But the gist is essentially that a lot of the first point is what I'm trying to get you to look at in this is a few things. One, this is done by a hedge fund research shop who has a short position in the name. Okay, so that's one. But it points to how much work they do. So when we talk about how the hedge funds have some edge, or they have, we're following the UOA because these guys are, they're so good, and they're putting a lot of money to work to find the answer, right? Money that, millions of dollars they're putting to, because their position is going to be so big. So they're putting millions of dollars as research costs.
Right.
Okay. So if you think about it that way, you start appreciating what they're looking for, how they're doing it. And I think this piece is a great piece to just show you how they do it. David Einhorn is not going to be much, very different from that. He has dozens of analysts that are looking at the fundamentals, but they're also trying to interview people who worked at QuantumScape, or who worked at Volkswagen, or who worked at anywhere that has touched the product or has sort of dealt with QuantumScape. And they'll spend money, $500 an hour. They'll talk to somebody for $500 an hour, $1,500, depending on who you are, a manager, $1,500 an hour, just to sort of get your feedback and ask very specific questions. And they'll tape it, and they'll have a transcript of it, and it's coming out of the person's mouth. So now you're hearing firsthand. Now, some people may say, oh, this person got fired and that's why he's talking bad. However, all of that is true, but they're trying to get details regardless if someone, they're trying to figure it out. Now, can some of, when they're putting out a report, can they sway it one way or other? Of course. Just like the CEO is swaying it one way, his way, this guy's saying, hey, look at this. But the detail and how they're doing it. They've got experts in there talking about solid state batteries, experts in the field, experts here, they got people from Volkswagen giving comments about, why they think Volkswagen has actually invested, which is interesting that Volkswagen is under so much pressure to have something like Elon Musk and have some new battery or some invention that they have to be invested in something that is, potentially in the future could work. They have other things, but they have to invest in something. And this is something that they're really involved with. They're one of the largest owners. It's really, really good reading. You could try to brief as much as you can, just go through it. And then it talks about basically that the product doesn't really work. It works in a small, in a state, okay, a certain state in a certain size. And apparently batteries at that size could work in different ways. But when you make it bigger, when you make the battery bigger and try to scale it, it's going to have a lot of problems, and that's the problems people have. They also talk about a lot of different things that, honestly, I'm not an expert in trying to do it, but I read it and I understood what they were trying to say. The point is, he also goes into the owners of this QuantumScape and how some of the big investors in the past have been involved in fraud. That's a big red flag. Like that, I don't think I knew part of the story. I didn't know that part of the story. That's a big red flag. The actual investors that are in it were involved in potential fraud or have done things that were sketchy in the past, basically pumping up stocks and then completely getting out of it. He actually shows names that they were all involved in and shows how it all transpired. And it has the elements of get involved, pump it up with some great story, and then immediately when they have the chance to get out, they sold everything, made millions and millions and some of them billions of dollars, and now they're onto this name. Again, I'm just taking that short for what it's worth. But if I'm looking at, I'm just trying to draw out what are the real facts. If the facts are that this guy was involved and these were his actions, and you're trying to understand who's behind this company, it gets a little scary. It gets a little scary when you're reading that. The stock has been under pressure continuously since the report. It's only a few days old, but I think it's a good read. I think it shows you why UOA, what we're trying to follow, right? Usually hedge funds are not putting out their research, but that's what hedge funds do. That report, just to give you an idea, is that when you see someone buying Peloton, he's not buying Peloton just because he wakes up and he's like, I didn't like my bike this morning and I want to buy Peloton puts. It strikes me as he has someone within the government that he heard a story and he made a call and he said, what the hell's going on with this Peloton? Did you see what's going on? Do you hear this? There's this rumor that a child is dying or died, or that other kids are getting hurt. What are you doing about it? And they start putting pressure. Mm-hmm. And all of a sudden it becomes a story because maybe the hedge fund forces it to become a story.
Right.
These are things that, that this is, and it's all legal stuff. It's above board, but it shows you, I'm trying to show you how deep they're going down the rabbit hole to get answers or to figure things out. And that's why UOA is invaluable. That's why when we see it and try to understand it, it can lead to something that's really good. Not all the time, and we're not gonna read it all the time, but in this case, it sure seems like somebody knew, very pointed, 100 puts. They were in the maze too. Maybe the hedge fund is the one that found the family and said, do you have a nanny camera? Bullseye. How do you know? Or maybe there's all sorts of ways to sort of drum this up, right? I mean, if you watch the show Billions, right? It's not that far-fetched, the stuff that's going on. There's some far-fetched. I mean, they add the element of Hollywood, but they're to come up with those stories, they ask people like me or, people working at other hedge funds, like, tell us hedge fund stories. Tell us what people do and how they do it. They had a thing in the Billions. It was great that they had it was like a food poisoning in one of the seasons. And sure enough, when you think about it, you're like, why couldn't that happen? How easy. And then, oh yeah, by the way, it did happen. Chipotle got caught with, there was 5 different places that had some people got food poisoning and whatnot. Stock tanked. Right. And then you watch Billions and you see how maybe it happens. Why couldn't that happen? Right. I'm not saying it happens exactly that way. And I'm not even sure it's even happened 1% of that way. Maybe it was truly some avocados or whatever that went into the Chipotle. But at the end of the day, you see how evil this game could be if hedge funds want to short Chipotle. It's been running up and they caused this to happen. I don't know if it did. I'm not saying it did at all. I'm just saying when I saw Billions, I thought, why couldn't that happen? Right. Same thing here. When you start digging deep into these ideas, you start seeing like, wow, this is incredible, right? It's pretty amazing how they get this information, where they get this information. Did it even really happen, right? Or is this just all made up shorts that are just coming in trying to attack the stock? Nobody knows. Like, we don't get the full picture. That's what we're trying to do right now. What's really happening? Mm-hmm. So I show this to you. I think it's a good, I call it quick read, 180 pages. I probably read the first 10, and then I went through the index, and then I started reading little spots here. When it got technical, I passed. I started reading why, maybe it didn't work and hearing the comments from experts. But I think it's interesting. Now, what did we say about QuantumScape? We said QuantumScape is a binary situation, in my opinion. What does that mean? It's either going to go, if the solid state that they're producing works, it's going to 1,000. Okay, it's going to revolutionize everything that we know and how everything exists right now. So it's going to 1,000. Okay, so if it works, if it doesn't work, maybe it's going to 0, 5 or 0 under 10. It's going down. Okay, so that's a binary situation over time. We don't have an exact date. We don't know when. So what I was saying in the last video, again, same thing. You could go see what I was saying. Look it up on the YouTube channel, and we discussed these types of situations. If you want to own QuantumScape, that's fine. But you want to size it correctly. And in a situation that's binary, and you have a portfolio of, say, $250,000, 1% of your portfolio, maybe 2, if you really want to get aggressive. 2% of your portfolio should be in QuantumScape if you like the name. If you choose, I want to get long this, it shouldn't be more than 1 to 2%. Not in calls either, but in actual stock. Okay, you can buy a little bit and get a little bit aggressive in calls, but you want to size that as well. You don't want to use the same 2,500 to the premiums. So point being is that you want to size it correctly, because if it works on a $250,000 portfolio and you put in $2,500 and the stock goes up to 1,000 and it's worth 30 times, what it is today, 40 times what it is today, then that $2,500 turns into $7,500 at some point down in the future. And that's only one stock in a larger portfolio. That's how you build these portfolios. But when you're coming in and people are buying a full stack in QuantumScape calls, and it's this type of situation where we're talking about a fantasy 5 to 10 years out, maybe. And if one bad thing happens or a negative report even starts denting the story, even brings out just a little bit of negative that's true, then the story is dented a little bit and people start selling. Right. And this is why, we're here trying to help people understand what's, how you should size these things, how you should think about your portfolio, and whether or not you're going to play it with options or with stock. So that's my QuantumScape. Again, it's good to understand where people are coming from and what behind every one of these unusual options trade, you have research like this being done. Mm-hmm. It's just you never see it. Nobody knows. Right. Somebody sees it. But that's the research being done. Okay, cool. So we have that. We have what else?
One I've seen, it was skills. Actually, we talked about it. It went down. We predicted it. Now it looks like they're buying calls.
I didn't predict this. Somebody bought puts like a madman and predicted it. So you know, we just spotted it and showed it to people. But damn, this is it's a hot mess. Let's see here, skills. Here's one. They're buying calls today. Or what are they doing here? Skills.
Looks like they're rolling down. Yeah.
Look, stock has gotten drilled from 50 to 47 to 13. It's almost to 10 where I told you every one of these stocks will go, but let's call it. So what do you got? The 15 and a halves, 15 and a half, 25s. Okay, so they're selling the 25s. Yep. They're buying the 15 and a halves. So I'm going to go here to see, just to see if it was on the most closer to the bid on this one. This one, 5,000. Let's go right there. 25 cents. Okay. All right. So they're buying 15 and a half, selling these, and the stock is still getting drilled on call buying. You know, on all of these, I think, you know, the hedge funds have seen what has happened in with names like GME, AMC, with all these, you know, the short squeezes, you know, trying to short silver. They're more concerned these days with potentially getting blown out of the water because an army of a million investors come in and spike it up. And so, you know, when you're at, we were talking about skills right here. Repeat buyer puts, stock gets drilled, and we're at April. This is expiration. He bought the 25. They were buying the 25 puts, and they crushed this stock. Now expiration is done, and it's still no lift. The stock is still trading lower, and you got a guy buying 15 at calls. I suspect that someone has a valuation on skills. They probably had a valuation when it was here, saying it's worth. I'm just throwing it out. I'm just throwing out what hypothetically a hedge fund might think. It's worth $9. Okay. And so if it's worth $9, I'm willing to short it, keep shorting it, or keep my short on, maybe even keep pressing, because that's what these guys do. They start pressing and pressing on the way down. But I will press this as far as I can. And I think the value in the stock is hypothetically 9, let's just say. And I'm going to buy dollar calls. I'll buy dollar calls when this, what was it, the 15 and a half 20s?
Yep. 25.
I'll buy the dollar calls when it's down here. He probably bought them, and I'd have to check. Let's see. Did I see this earlier today? Skills. 416. No, we did this trade somewhere around here, but I suspect that the guy bought these 20 calls when the stock was, maybe it was a week and a half ago. I would have to check the history. Okay, the historical data, and I suspect he bought him here. He's short all the way down here. He's shorting this name. When it gets here and it hits the 200, he probably says, "Let me buy the 20s for $1 and change, or whatever he's going to buy them, $2, whatever he's going to buy them." And I want to keep pressing because I think it's going to 9. And when it gets down to 15, he's made another several dollars. Okay, and now he's really protecting a bigger short, and that's the way I think. That's what I think he's doing, and that's the way they trade, right? They're more concerned right now with more concerned than ever that a short squeeze might happen, even though they are hard to do. You don't see them often. They're hard to coordinate. But I don't know. It's still a weak stock. So I don't want to buy this stock until, it might go up 14 to 16. I don't want to buy the stock until, it goes up, comes back down, and they buy it again higher than where this is right now.
Right.
So
right.
show me, what you want to essentially do is, otherwise we're just trying to pick a bottom, and you could have been wrong here. You could have been wrong here, all the way down. So what makes this right today, right? Let it do this. It's going down like this, basically. Let the stock go like this, come back down. Okay. And if it comes back down and kind of holds a higher level than this, then you know what? Then the next level is on the move up here. you got some support here. You got it. This right here would be telling you from here to here, telling you there's buyers there, right? They bought it
Yeah.
here, came back, they bought it again, and now it's moved up. I'd rather buy this stock at 17 instead of 14, frankly, right? Because at 17, I know that it's washed a lot of people out and going. This to me, it's one of those things you just don't want to jump in. You don't want to keep jumping in because you get names like, what's a name that's been doing this? You get a name like this that I saw recently, and now it's 8.5, right? Same type of stock, and just where's the bottom? The bottom's here, the bottom's here, the bottom's here, the bottom's here. It just keeps going down, right? It just keeps going down. And now it's 8.5, and it's still pressing. It's still going down, right? Because you have all these people that are doubling down, tripling down, quadrupling down. They got their whole stack in the game, just one stock, and it just keeps going down. And you know what? These long-term holders, quote unquote long-term, they'll probably sell at 5, 6. Right. So this is the type of stuff that you want to be careful of. I mean, we started this here. I mean, but we're talking about the left side of the mountain and the right side. And I can't say it enough. This side is brutal. This side, it's investing has never been more fun. Okay. Investing is like, this is like, why, people, I'm quitting my job. Here's where someone's saying I'm quitting my job. And over here, they're saying, they're getting their resumes again. It's unfortunate. And all I've been doing for the last 4 months is trying to prepare people for what we're seeing on this side of the mountain. People laugh when I see the mountain, the right side versus the left side. Trust me, I've lived both sides. I know the feeling. I know the emotions. Like I said, on the left side, you want to quit your job. You think, why wouldn't I do this every day? This is the easiest job in the world. You just buy calls, you come in, your stocks are up, you make 50 grand, you come down, you buy it again, it goes to 100, you make millions, right? And then when on the right side, you start doubling down because it's not doing the same thing that it was before. And we're on the other side. And it's unfortunate, but it's a lesson I guess most people have to learn for themselves. And it doesn't matter how, it's like I did talk with my daughter this weekend, and I could tell literally one ear she's nodding, out the other ear, and next thing she does exactly what I told her not to do. It's like, okay, So I know I was 11 too, and I also was new at investing as well, and I did the same mistakes. So it's just important to I'm just going to keep saying them, and I'm going to keep, that's my role, to keep saying it, to keep trying to show you this is what I am talking about. This is exactly what everybody's talking about now. Is exactly what I'm talking about. And sometimes this thing takes, like EVs and all these names, they could take 6 months to a year before you start getting it to turn back up. It's got to wash people out. It's got so many people on the boat that the boat is too heavy. It's not moving fast. Okay. So keep that in mind.
Cool. Thank you.
I did see one, but by the way, that popped up before that I wanted to go through that I think is interesting, and I'm going to tell you why I think it's interesting. So we see here it's Deutsche Bank. We're talking about the banks here. The banks came out with earnings, and things were decent enough. Things are, a couple of them were up, a couple of them down, mostly positive. But we're seeing here some call movement around the 13, 15 calls. These, if you look at the historical data, were bought. They're selling these now here. They were bought on, I have it on March 3rd and 4th. March 3rd and 4th. So let's keep those days in mind. March 3rd and 4th here is, sorry. How do I do this? Let's see here. Okay, here. Deutsche Bank. All right. So we have, let's take a look at the stock. This stock has been a perennial loser for quite some time, and I think that's what makes it exciting, to be honest. The fact that it's been a loser for so long. Okay, so the stock has been a loser for a long. This is 10 years in the making. Stock down. Problems with the German government around here. Deutsche Bank had to go bankrupt. Stock try to, no, it's not. It makes a big move here in last year, and then with everything stalled with COVID, and now it's trying to come back. So you have this really long-term downtrend in Deutsche Bank. Lot of problems across the board, all over the place. And now, if you look at it, so now let's close this up. That's just 10 years on a weekly. I just want you to get a sense of the story, the general story. And we're going to do it daily, but we're going to reduce the time to just 1 year. And we see here what looks like a different story, a different stock, right? And I think that's part of what, let's go 2 years to just go back a little bit. It's part of how you should start looking at these things and saying, this is 2 years. We saw it goes around, and we can go back further, but we could stop here. And, we saw the bad chart, 10 years is just straight down. It looks awful. But now there seems to be some glimmer of hope. Like this, the 200 days here is starting to move up. The 50-day is moving up. That's both positive, right? You can just eyeball the chart and say, it does look like this does look like a constructive chart that it's trying to move up, regardless what it's called, Deutsche Bank or whatever you want to call it. But this is all fairly positive. We have some of these ranges, let's call it right around here. And we have something going on right around here. And then we have this high at 13. So if we look at March right here, we're right around here. This is where the call buying was, right around 12 3/4, 13. Okay. And now the stock has come off a little bit, okay, in the last month, and now it's trading 12, and they've rolled down. So you like to see the confidence that they're coming in to roll down. I like seeing the confidence in a very constructive chart in a name that has been brutally beaten up for a while. Why would somebody be doing this? Why is somebody getting long Deutsche Bank? Is there going to be positive news coming out of Deutsche Bank? Is there something that, developments that we don't know about that? I don't know. But when I see that a perennial loser, has bad, everybody talks bad about Deutsche Bank, yet the chart over the last year, 2 years is telling you something different. The banks are also moving up, so maybe that's just part of it. It's going up with the banks, but nonetheless, you have this a little bit of a flag here, a pullback, and you have this kind of going on in the name, right? And now somebody's buying the 15 calls, which this went from 10 to 13 1/4. So it's 3 1/4, 3 1/4 plus maybe right around 12 1/4 gets me 15 1/2, and 15 1/2. Let's just say, so you see where that came from, right? 50.
Yes.
I just want to not make it so confusing let's just take this. I'm looking at this flag here. And we spotted this is where the call buying was the last time. That was a month ago. Now 6 weeks ago, now they've moved down to the 13s. They were looking at the 15s. They thought this was going to 15 and above. Now they moved down to 13s. And then we see this flag technically can get to 15 1/2. Okay. Deutsche Bank 16s. I'm looking, they're getting out of this. So their only position is going to be here, 13s. This is saying 1470. So 15 gets me right there. And 16 is going to get me, sorry, that's way too. 16 gets me right there. So it looks like 15 1/2, 16 is sort of where he's thinking. He's paying 62 cents for the 13s, paying 62 cents for the 13s. And using this, we were able to sort of dictate 16 is about the right range. Is that fair? So it fits perfectly. So that fits perfectly with this, right? So the options analysis by itself fits, is telling us the guy thinks 15 1/2, 16. We look at the chart, it says, 15 1/2, 16. Now we look at the previous, we've looked at 10 years and we see this is a disaster. So maybe something is changing, right? Now I would go in and start digging into Deutsche Bank and say, is something changing here? Why Deutsche Bank? Why right now? What's going on? Okay.
Okay. Nice.
Good.
Like that.
Good.
Great.
Any questions?
If you guys have any questions, let them know in the comments below. Make sure you like the video as well. Write the questions. We're going to answer them in the end. But in the meantime, Felix, why don't we take a look at CLOV? It's been heating up. There's a lot of call buying there.
CLOV. CLOV. Man, stab me in the heart. Why don't you? CLOV. CLOV. I loved you. I loved you like a brother. The CLOV. We got long CLOV here like idiots. Well, me anyway. I'm the idiot. And then the Hindenburg report came out and it was a disaster. And so, CLOV in general, I like CLOV. Just as a general statement, I like CLOV. It's in sort of the right space, and they're partnered up with the right partner. They had partnered up with Walmart. I was very excited about that because what that did for me was signal to me that Walmart was interested in what CLOV has. Okay. Now the negative on CLOV was that they really weren't national. They were stuck in Jersey. Their main area was Jersey, and that's where they had their biggest business. So that didn't bother me, because what I liked was that they potentially could replicate that in other cities, and then it's game over, right? Then it's a system that they need more doctors on it so that they can get more data and get more data from patients, and then they can, essentially lower costs for healthcare. And it's an interesting whole. I like the story. I like what they're trying to do. Again, if they can replicate the city, that was going to be, stock would explode. Okay, it really would explode. So do what you did in Jersey, somewhere else, stock explode. So what did they do? They teamed up with Walmart, and they were going to do it, I believe, in Georgia. So that to me was, okay, Walmart sees the same thing I'm thinking. If they succeed sort of replicating what they did in this area with other areas around the United States, Walmart's going to say, we'll take you, right? Mm-hmm. We don't need to build it. You build the network. You're working on building a network. We'll just buy you at some point, right? If it works. And why? Because Walmart's trying to get into healthcare, and it would be a good addition to Walmart. It's a technology app type of thing that is using data to sort of help push down prices. What's not to like about that, right? It's the dream, right? That is the dream. So I bought into the dream thinking Walmart was the big guy that was going to come in and say, this is what it is. Look, within a couple of weeks, this Hindenburg report came out. It's a fraud. Whenever you say fraud, I mean, it's a dent in the story. It doesn't matter if it's real or not real. It's a dent. And what happens is, I don't go in there trying to double down and trying to, it happened. And, I'm telling people, if you have a full position, you just get out. Like it's a dented story. It's a dented dream, if you will. And it's going to take some time. That was months ago. And I see it at the corner of my eye, but I don't like to look at it much, so I see that last week it was in the news. I think even today there was an error on a page on a website that had short interest at I think it was 135, 140%. Turned out to be wrong data. And they were talking about a squeeze on that, and people are jumping in. Turned out to be wrong, and then they refreshed it to be, I think it's only 25, 30%. I don't know what that does to the story. I don't know. I hope people are not just buying it just for a squeeze. You want to buy the company on merits of what they're doing and the technology and how it's progressing. They're buying calls now. That's great. I think what earnings has got to be around the corner here, right? Where's earnings? So I guess the moral of the story on my end is, look at that, up 11%. That's awesome. 5.3. So in a couple of weeks after earnings, and people probably buying the 10s yet. So the 10s. So here, I mean, look, this is an interesting. You see, when we were talking about this is actually pretty interesting because we're just talking about it. Let's go here, and let's say 8 months here. We're talking about all these stocks that have been going down, right?
Yep.
They've been going down. They all look like this. I'm going to show you something. This is what it needs.
Yep.
That's what it needs. This is what turns around a stock. You see how it jumped here on good volume? I don't know what happened here. Jumped here on good volume, trended lower, and then jumped again twice. This is a good positive development here for the knee. Does it go back up to 16 3/4 quickly? I don't know, but this you got to like, if you were, you got to think, okay, it's over, and maybe we're now going to take charge. Remember, the shorts are saying this is a fight. Think of it as a street fight. Okay, I'm going to start shorting you. I'm going to pile on the short here. Now I'm beating you. You're hurt. I'm going to keep pounding on you. Keep shorting you. I'm going to keep being aggressive. Okay, I'm going to aggressive all the way down to 6.5. Finally, at 6.5, they go, no. Somebody steps in and says, I'm going to buy it here, takes it back to 7.5, goes up, and the shorts are like, that's not good enough. I'm just going to keep on coming after you because I've made a lot of money, and I'm going to use that P&L to keep pounding you here. So I'm going to pound you. And again, you see with the lowest here, and then again, you have a higher low. Even though it went down here, it's still kind of, it's good. It's not the best. It does try it again here, and then you get another low here, but this was great volume. And then here, this is good volume. The next day, obviously, when you held it, when you held it here after that day and you didn't bring it all the way back, that's going to be scary for the shorts, because that means, okay, you either got friends into the fight now. That's like, the shorts are in trouble, right? The shorts smell that, okay, I'm not winning this This was good for the shorts. They got excited. This was no good holding it, and this is certainly no good if they try to push it here. So now the shorts there's a lot of probably, I wouldn't say a lot, but there's people that they've made good money here, but the shorts tend to, the way the shorts work, it's crazy. They actually, when they think they got it, they start doubling down here, right? If you look at the position, if you're short, let's just say you're short a million shares at 17 and a half, that's $17.5 million short position, right?
Mm-hmm.
When you get down to 7, you only have a $7 million short position. So they need to actually get 2.5 times what they had up here to get the $17 million short. So what they're doing is they're pressing, and 7 times 2.5 is 17, about 17 and a half. So 17 and a half times 17.5 million share short position here is the same here if they got 2.5 million shares.
Wow.
So now they get caught here, and then all of a sudden it's a little scary for them because their break even is probably somewhere around here, 13. So that's the short game, if you will. It's a weird way they play it. They actually get bigger lower because they get more confident that it's going to go down to $5 or whatever, 0, if they think it's a fraud. Does that make sense?
Yeah, nice.
So they have to keep pushing. They need more stock in there to get the notional value of their position the same. It's interesting.
Cool.
It's just and then what happens is when it gets to 5-4, they're so big, and then if you get something like this where it's boom, they take it up. Now they have to cover on a much bigger notional. So it's an interesting development. That chart is what you want to see on NIO, XPV, Lee. You want to see a big push with good volume, and then you want it to hold, and maybe the next day another push. That's going to scare the shorts, and then the shorts are going to back off a little bit.
Nice.
All right. Good.
Love it. Let's see what we have. Not really seeing any questions in specific, guys. We have a few more that we can point out, like Comcast. Was it CMCSA?
Was it Comcast? Comcast, okay.
CMCSA, right? Yep.
All right. Let's see if anybody has one before. I'll give it. Yeah, Comcast. So let's see. Comcast. Comcast is. What did I do there? Let's see here. All right, Comcast. Okay, so it looks, like somewhat of a weak development here today. You have a stock here doing this, just coming off, hits the 50-day, drops, goes through, and now it's coming through again through the 50-day with, the volume's not. We'll see at the end of the day if that volume came up, but this is, you're talking about also a high here, and then if this is the turn or low, a high. So the way I would look at it is, say, 58 down to 52.5 is 5.5. 55.5 less 5.5 gets me to 50. 50 would, if this continues, then, maybe a buyer right around the 50 level is where you'll see buyers, maybe even right here. So let's call it 48 to 50. If it starts breaking sort of this 53 level.
Okay.
See this right here?
Yep.
You see that channel, this channel, that channel, and then we're kind of going up this channel this way. So it's got to break. It's got to break here. Breaks that, you can start seeing it weak to 50. So I would be looking at that level. What are they doing?
I don't really understand. It looks like May, July puts calls all over the place.
May, July puts calls all over the place. Okay. Well, let's look at the Mays first.
Okay.
All right. Let's see Mays. So we got 3,000, 30 open interest. A lot of open interest here. Actually. There's a lot of open interest to Comcast. It's interesting. This might be a funding trade.
Yep.
Or a borrow, but a funding trade looks like. And then just for today, we have 3,000. So let's see. These are the puts. 153, 26.3. And let's see the calls. 26.4. It is a little difficult to say where whether they bought. I would suspect they bought these and they sold these, and that would be $1. What did they pay? So bought those $1.53. Okay, so they pay $1.53 and they sell these at $1.19. So you're talking about 34 cents. So they pay 34 cents out through May to collar to protect by buying the puts, selling the calls. They're protecting the stock around here, which likely tells me that they were probably going to sell some stock, and probably reduce positions a little bit. So, for example, what they might do, they did let's say they did 3,000 of these, right? So they might have 1 million shares, right? Say someone has 1 million shares at 50 today, it opened up at 55. So the 1 million shares, they get a collar 30%, 3,000, they collar 30%. And that means they call it on 300,000 shares, and maybe they're going to take 1 million down to 500,000 shares. So say, you know what? I don't want to be long 1 million shares. Get me down to 500 and collar it over earnings for 300 of it. So 60% is at least collared. If it goes up back to 55.5, maybe, we'll figure it out when it gets there. But he's concerned. This sort of tells me that he's concerned a little bit about the earnings number. And he just wants to have some protect. He doesn't want to see this thing trade 48 and he give up a lot of his profits. Okay. So I would think that's a trade of concern. And what do you see in July?
Yeah.
That would be a trade of concern. And what is July? Let's see here. July puts, 50 puts. So also, are they buying these? 104, 26.1. Because it was bought and just trickled down after that, I would say I would lean towards buying. It seems like somebody would buy that as opposed to sell that, considering the setup. So I'm looking at the psychology of the setup, and I'm trying to make an inference on, what I see here. Buying the 50 puts, would mean a target of somewhere, let's call it 45, 44. I'm using 46 as a guide there. So 44. No, a little bit lower, 43. So 43, 44. Can you get to 43, 44? That's the gap right here. So interesting, right? Like, they're looking at that gap. So maybe someone bought it somewhere around here and they've been riding it, or, whatever, but they're protecting this 50. If you're buying those 50s, you're thinking at that price, you're thinking somewhere around 44, 43, 44, which is interesting that it just lands right in the middle here. Okay.
Yeah.
I mean, that's how I would read it. That's what I'm thinking. That's what it looks like they're looking for.
Cool.
Okay. Awesome.
Yes. Great, Felix. Great start of the week.
Good.
Loved it.
We'll see you tomorrow. Let's see if this market could catch a bid and try to stay up here.
Sounds good. All right.
Big
Thanks, guys.
Bye.
Thanks, Felix. See ya. Bye.